Welcome to the IFRS for SMEs technical series. I am Calverwell and I help SMEs apply accounting standards to improve reporting, strengthen compliance, and build credibility with banks, investors, and partners. In this video, part of the Technical Accounting for SMEs series, we are looking at Section 26, Share-Based Payments. We'll define what a share-based payment is, examine the two main types, cash-settled and equity-settled, cover recognition and measurement rules, and finally address modifications, cancellations, and settlements. A share-based payment is a transaction where an entity receives goods or services from a supplier or employee and settles the transaction in equity instruments or incurs a liability based on the value of equity instruments. The defining features are: settlement is tied to equity instruments of the entity. It involves consideration of goods or services. There are two main types: cash-settled share-based payments. The entity incurs a liability to pay cash or other assets based on the price of its shares. A common example is share appreciation rights, where employees receive cash equal to the increase in share price over time. Equity-settled share-based payments, the entity issues own shares or options as payment for goods or services. Here, no liability to deliver cash exists. The settlement is through equity. An entity recognizes goods or services received in a share-based payment transaction when it obtains goods or as services are received. For share-settled transactions, debit expenses or assets, then credit equity. For cash-settled transactions, debit expense or asset and credit liability. If the goods or services don't qualify as assets, they are recognized as expenses. Vesting means entitlement is no longer conditional. Service conditions require a specified period of service. Performance conditions require service plus performance targets such as profit growth or share price increase. If share-based payments vest immediately, the services are presumed received in full at grant date. If vesting is delayed, the expense is recognized over the vesting period. For equity-settled transactions, measure at fair value of goods or services if reliable. If not, use the fair value of the equity instrument granted. For employee services, fair value is always measured by reference to equity instruments because the value of service cannot be measured reliably. The measurement date is, for goods and non-employee services, the date received. For employees, the grant date. Non-market conditions like profit targets exclude from grant date fair value but affect the number of instruments expected to vest. Market conditions like share price targets include in grant date fair value and not adjust afterward, even if conditions are not met. Fair value of shares and options is measured using a hierarchy. Observable market price, if not available, recent transactions or independent valuations. If impractical, use valuation models such as option pricing models based on market data. For SMEs, market prices are rare, so valuations or models are often required. If a share-based payment arrangement is modified, if fair value increases, recognize the increment of value over the remaining vesting period. If fair value decreases, continue accounting as if modification had not occurred. If cancelled or settled early. Treat it as accelerated vesting. For cash-settled transactions, measure goods or services acquired and liabilities incurred at fair value. Remeasure liability at each reporting date and at settlement, with changes recognized in profit or loss. If there is a choice between cash or equity settlement, the default is cash settlement, unless past practice or commercial substance indicates equity settlement. Section 26 ensures SMEs account properly for share-based payments, whether cash or equity settled, reflecting their true cost and impact on equity or liabilities. Stay tuned for the next part of the Technical Accounting for SMEs series, where we'll explore another key section of the standard that focuses on revenue.